In today's FX markets, let's take a look at the Australian dollar as it's experiencing some selling pressure today. Australian dollar lower for a second session. Today's price action has the futures market down about 0.25% right now, right around the 0.6595 level or 0.66. So we're seeing a little bit of selling pressure here today. And the primary driver appears to be the US CPI data, which came in a little stronger than anticipated. It's certainly having an impact on various asset classes. We're seeing selling pressure in the FX markets. We're seeing selling pressure in the Treasury markets, moving those yields higher. And therefore, that's helping to support the US dollar today. And that's why I think we're seeing, again, some selling pressure across various parts of the FX markets today. Nothing too significant, but the Australian dollar experiencing some of the heavier selling pressure, down about 0.25%. Now, looking at the price structure today, it is interesting. Today is what would be considered an outside day, meaning today's high is higher than yesterday's high, and today's low is lower than yesterday's low. So therefore, a little bit more volatility in today's session. But really, when you look at the price action over the last couple of weeks, we are coming off the recent highs, which correspond with the highest levels since the middle of January. So almost 2-month highs for the Australian dollar before giving up a little ground here. And that's kind of playing out in various parts of the FX markets as we're seeing, again, selling pressure. The British pound down about 0.25% today. The euro just down slightly. The Japanese yen down about 0.5%. So that's experiencing some heavier selling pressure. So again, reaction to the US CPI data, putting some pressure on the Australian dollar, coming off of basically the highest levels in just under 2 months over the last couple of sessions, but still at the top end of the range, even with the recent selling pressure.